What advice would you give to someone starting out?
I would say, look, first of all, do you really find this interesting? Is this really what you want to be doing? Do you enjoy the study, the work, and the reading and the analysis that you're going to do? Because if you do, then great, you're going to really enjoy yourself. But just remember that it's. I know it looks like great fun and it looks like a computer game sometimes, and it's a real buzz. But ultimately, you've got to treat it as a business, and as a job, and as something that you ultimately you don't want to lose money. You want to make money doing this.
How winners manage risk? So, what would you recommend as a starting balance?
So what an amount of money that you take in to risk in the market. Well, that is really subjective. What I would say about this is, first of all, it's got to be risk capital. And my old boss Stuart Wheeler used to say, right, and this is going back. Well, I worked at IG in the 80s. Basically, as your absolute starting point, you have to have your pension up to scratch. You have to have your savings up to scratch. You have to have everything, all your financially, your I's dotted and your T's crossed, and then you've got some risk capital to play with. And this is money that you can or are prepared to lose. So if it all goes wrong and you've lost that money, then you're not going to fret about it, and it's not going to be life changing. And I think that's a good starting point. Now, how much that is going to be it depends from person to person. You might sort of be very lucky and have an inheritance, or which you feel that you can use and want to use and want to use in the derivatives markets. But remember that the really important thing about this is these are leveraged markets. They operate on margin, and that means that you're not paying up the full amount of the risk should it all go wrong, and consequently you must be wary of that. So this is why you've got to sort of keep. Make sure that you manage your money properly. Sort of, you're only sort of betting or trading with a small percentage on every particular trade. Manage that properly and use your risk management. And if you can do that, then fine. If you want, I suppose that sort of like there is a separate aspect to this, and I know that margins are very low on a lot of products out there, especially FX. And so it could, and also there are sort of these micro contracts that that you see that a lot of companies now provide. So it is possible to start trading a leveraged trading account with what 20 years ago would have been considered a laughably small amount of money. We're talking about maybe £500 or something, maybe even less. I would say if you are really serious about wanting to trade leveraged derivatives products, then you should think of having a pot of no less than £5,000 of risk capital in the first instance. That's my view.
Do you believe one needs a trading plan to succeed? Some traders seem to trade well on a sort of instinct that they've developed.
My own experience is that I don't know anyone who has sort of traded successfully for any length of time just trading on their gut instinct. I saw it on the life floor. I saw people make trades which appeared to be sort of gut instinct, but they weren't really. They were responding to the immediate things that were going on around them. Because they had the heads up that a sort of a big order was coming in, or that they knew it instinctively how to react, how their market would react to a bit of a data release or something like that. And they were just fast enough to capitalize on that. And that's what I see as sort of gut trading. It's someone who's saying, not only do I realize the implications of this bit of news, but I'm going to go quids in and take full advantage by dealing in big size and getting in and out. And that's what you used to see on the live floor. And that's what I see as kind of gut instinct. But I don't see that. I don't see that now, and I don't see people being successful traders by just looking at a screen and saying, or and being able to trade off their gut. I think you've got to plan it. You've got to, look at the technicals, deal with the fundamentals, and really plan your trade accordingly.
So yeah, just in terms of trading tools that you've used or that you think are useful.
Yeah, I mean, trading tools. This is one where it's possible to get really bogged down and a bit lost. And I mean, I think like a lot of things, it's just keeping it simple. Keeping it simple. There are degrees of keeping it simple, but the things that I would be looking at myself. I like drawing lines, so I like to see whether there are where there's obvious levels of support and resistance. That's the very first thing to do. So you can see where if prices are sort of tending to hit a certain level and then pull back, so that's going to be your resistance level. If prices are falling and tending to sort of cluster around a certain level and then moving up, that's your support level. Now that's sort of very basic level. But what I also really like using, and tends to work in a trending market rather than anything else, is Andrew's pitchfork, where you get an idea of support and resistance and the overall trend of the market. It's a very easy tool to apply. I mean, it's very subjective in that you're picking 3 points and then sort of seeing what happens and comes of that. But it can be a help. Also, Fibonacci retracement. I mean, Fibonacci, it's amazing how well it can work, and I would always have a few Fibonacci retracements on any chart I've got. And in terms of indicators, I don't really use indicators too much. I mean, occasionally I'll sort of put MACD on. I do like moving averages, so I mean, I guess 10, 50, 100, sometimes a 300, but those, I mean, 10, 50 and 100 would be the ones I guess I'd look at. Sorry, not 300, 200 day moving average. RSI occasionally.